Hi, welcome to our latest episode. I'm Francesca from SeavorChartered and I head up the payroll department. Today I have Graeme, our director and client manager, and Liam, who's a chartered accountant. So, as always, we'll just start off with a little update on how things are going in general with business and the economy. And Liam, do you want to start us off?
Yeah, busy time at the moment. A couple of months after tax year end finishing. So more of just a reminder for anyone watching. Try and be as proactive as possible. Get your records in to whoever needs them. Just then you can get ahead of the game for tax liabilities come January. Another one, just to watch out for fraudulent emails as well. It's becoming more and more regular happening now. So it's more just to be aware. And if you are unsure, always ask as well.
Yeah. It's not always just emails as well, isn't it? It comes in all forms.
Phone calls, anything, text messages even. Getting plenty of them nowadays. So.
And letters in the post. And I know, I think Companies House have been circulating a legitimate email, but it's another opportunity for fraudsters to send things which aren't legitimate, trying to catch people out almost. So just be aware and make sure you take that extra care.
Yeah. And obviously we're always available to someone to check, aren't we?
Yeah, absolutely. Yeah.
I mean, obviously in terms of payroll-wise, HMRC have moved the payrolling benefit was meant to be introduced April 2026, but it's obviously April 27 now.
Good.
I think it just allows HMRC to release some more information, gives them a bit more time.
Yeah. Also allows the softwares companies to make sure the
update.
software's sufficient and it's actually, we can test it and make sure it's working on time.
Yeah, definitely. So obviously today we're going to consider whether to trade as a sole trader or as a limited company and each aspect that's involved in it and the changes that come. So obviously the main considerations would tend to be tax and risk. Graeme, do you want to start us off on just a roundup on the legal structures and the liabilities?
Yeah, so I suppose, there's people already in business and you could be trading as one or the other or a partnership as well. Or it could be that you're just starting in business and you're thinking about what's the right structure for you. And I suppose you're right, a lot of people think, it's tax, what's best from a tax point of view. But as a sole trader, you've got a lot of risk. You've got no protection, which a limited company would offer you limited liability. So that if you did start something, a riskier venture, then, if things didn't work out as you planned, at least your personal wealth, your personal assets, they're almost safeguarded. Whereas as a sole trader, that's all at risk. If your business doesn't work out as you've planned as a sole trader, it's not just the business that would pay for those liabilities. It's almost going into your personal wealth to pay for it because there's no difference between a sole trader and an individual, whereas a limited company is considered a separate legal entity or a separate legal person with its own, I'm going to say responsibilities or, its own place really. So just always to be aware of that and think about it if you're setting up.
Yeah, no, that's good. Yeah, obviously, I know I touched on that a main consideration is tax. Obviously, there's income tax, corporation tax, different rates and thresholds. Do you want to give us a bit of a rundown on them?
Yeah. Do you want to do that?
Yeah. So obviously with your sole trader, you've got your normal income tax at 20, 40, 45%. But on top of that, you've also got your Class 4 national insurance, which can also be a killer sometimes, making you pay more tax, etc. But when it comes to your limited company now, you've got your corporation tax. Been changes now for a couple of years where you've got your different thresholds. So everything up to 50,000, you pay 19. Anything between 50 to 250, you pay at an effective rate of 26.5. And then if you're making anything over 250, it's all at 25% now. So they have changed it. But when it comes to even taking money out, there's obviously your dividend tax, which at the moment you can only take 500 out tax-free. And then everything else is 8.75, 33.75 or 39.35.
Yeah.
Now.
I suppose with that sort of stuff, it just shows that it's not easy. And if you're starting out in business or you're a sole trader partnership and you're thinking, is a limited company right for you? It is actually complicated and you're best speaking to somebody, an accountant, a tax advisor, that can hopefully give you the right advice and plot that out and see what it looks like for you. I know internally we almost have a threshold. If literally tax is the most important thing, we're thinking that if the tax is the most important thing for you, should I say, if your profits are below £50,000, then ultimately you're probably still best staying as a sole trader or a partnership. The reason I say that is yes, actually it's a little bit lower for it, the tax curve finish, but there's extra costs, admin involved, and you've almost got to compensate for that as well. So we would normally say, just from a tax perspective, you don't want to be considering incorporation until your profits are 50,000 or going over and above that.
So it's all a lot to consider, isn't it, in
Yeah.
terms of tax and stuff. I know you touched on dividends and the income tax, and obviously in terms of taking money out of a business, is there many differences, not as many differences between being sole trader
Yeah.
or being limited?
Yeah. Well, it's very different because a sole trader is just you. It's, you're an individual. You may have a separate business bank account that you're using to trade, but ultimately as a sole trader, that is just your money. So you could take out of that sole trader whatever you like, whenever you like, because it's yours. Whereas a limited company, if you've got a separate limited company bank account, it's a separate legal entity, it's a separate legal person. So that is the limited company's money. And for you to take money out of that personally, it's either got to be done through a salary, which is you're on a payroll and you get paid a salary just like being an employee of the company. There's then also what's called a dividend, which is money that's paid out of a company based on your investment or based on the shares or your ownership of the company. And that has different tax rates. And then the only other way is if you took money out of a limited company and it wasn't a salary or it wasn't a dividend, then effectively you just withdraw money out as a loan. And you actually you owe that back to the company at some point because it's not your money, it's the limited company's money. Even though you maybe own 100% of the limited company, it's not yours personally, it's the limited company's money.
So it's not as, would you almost say, with a limited company, there's more things to think about?
Yeah,
when taking money out.
When it comes to tax
definitely.
consequences.
Yeah. I know an interesting point. You went through some of the rates there about taxes and stuff, and a lot of sole traders when they come, they almost think, tax is 20%, or if it goes into higher rate, it's 40%, and they just totally forget about national insurance.
Yeah.
If you add your national insurance on, it's 26% now currently for sole traders. And since, I suppose, late last year when the government, they removed Class 2 national insurance, and that 6% national insurance now, it actually used to be 9%, and that got reduced. So people think, 20%, but actually, once you add in national insurance and everything, it can be quite different.
Yeah, and it adds up to quite a bit of money as well as soon as you start getting up there.
Yeah, obviously on levels.
Yeah, it's interesting you talk about these rates, but when it's there in front of people in pound coins, especially if they've had a good year, it's a lot of money now. Employees, they pay it through their monthly the pay slips, I suppose, and they almost don't see it. But for a sole trader or in a limited company, they've got to physically make that payment of quite a lot of money, and it can
be a bittersweet moment really, because you see how well you're doing, but at the same point when you start to see how much tax you're paying on top of that, it can kill you sometimes.
Well, I've had clients where you plan well in advance. You can almost be telling them in 12 months' time, if you carry on doing what you do right now, this is how much profit you're going to earn. This is how much tax you're going to earn. And they accept it and say, yeah, well, if I'm doing well, that's a level of taxes I've got to pay. And then they follow it through, they achieve it. And then it's like, yep, you've achieved it, well done. This is the tax. And all of a sudden it's like, oh God, what's happened here? Where's that come from? It can't be that high.
Yeah.
And it's just because it's a lot worse when it actually comes and you've got to make that bank payment.
No one enjoys it.
No.
Especially with things like that, you pay it in one lump, whereas a standard employee pays it, it's already took off before they get it. So they're probably thinking,
Yeah, and the worst thing is an employee does actually pay higher rates. Their national insurance rates higher than a self-employed individual. So they're actually paying more, but it's just because it's spread each month and they don't get paid it, do they? It's taken automatically.
Yeah, it's not getting paid to them and they're paying it over.
Yeah.
That's fine, obviously. So we've discussed there on tax and legal structures, and when it comes to administration responsibilities for either, would you be able to give us a bit of a breakdown, a roundup of each side, differences, similarities?
Do you want to discuss sole trader? Maybe I'll go over.
So sole trade, obviously, every year you'll have to complete a personal tax return based off your profits, etc. Mm-hmm. Obviously, you keep your records for a required amount of time, but other than that, there's nothing really else you need to do. As long as you're completing your tax return and by the deadline paying your tax over as and when, administration wise, there's nothing really more to it.
It's as straightforward a structure as you can have for a business in the UK. And when I say it's straightforward for us because we're dealing with it every day. I suppose if you're doing it or you're new to it, you can feel like, oh, what's happening here? But once you've been trading for a year or two as a sole trader, you get into the rhythm of it. You know kind of when your year end is, when your taxes are payable, and as your business grows, if PAYE becomes involved, if VAT becomes involved, when those sort of deadlines are as well.
It's kind of like as soon as you get into a rhythm of it, it makes it easy. Even if you're using software, it might seem like a bit of a chore, but after a while, it does become a lot easier.
Yeah. And then I suppose from a limited company, I always view it as a step up in admin and responsibility. If you're working with a good accountant, there we go. But if you are working with a good accountant, you shouldn't feel that jump up too much. But ultimately, you are responsible for doing more things. So as a sole trader, yes, you complete a tax return and it goes to HMRC. But all of a sudden, as a limited company, you've got accounts which go to Companies House, and then you've got your corporation tax return that goes to HMRC, and then it's also very likely as an individual you've got to do a personal tax return to HMRC as well. So all of a sudden there's those different returns that need to be made. And in terms of the accounts, there's specific standards, accounting standards that you must adhere to, and they've got to be compliant before even Companies House would accept them. Whereas as a sole trader, yes, there's a standard format, but it's not as strict as the format that you'd require for Companies House. And also the information when you submit it to Companies House, some of it's publicly available, whereas as a sole trader, it's not. Literally nobody could see anything other than HMRC on your tax return.
Yeah, so obviously just again quite a few changes, isn't there?
Yeah.
Between it's just something to consider. I know obviously, Graeme, you touched on the different submissions that you need to do with a limited company. I'm right in saying that they come with different deadlines and different payment dates. Is that right? Yeah,
it is right. So as a sole trader, you're going to pay your personal tax in January and July, and them dates do not change. It's January and July every year. For a limited company, you have your year end, and that year end could be any month of the year. There's not a standard year end for a limited company. And for a small, or more likely than for a small owner managed limited company, your corporation tax is going to be due 9 months and 1 day after your year end. Just I suppose one of those random rules, but that, and then as well, because you'll still be doing a personal tax return, you're going to have those July and January payments as well.
So that comes with just another thing to think about.
It's just another thing to think about. But if you had a good accountant, or you've got a good accountant, they should be monitoring those deadlines for you. They should be giving you reminders. You shouldn't be missing anything. They should be prepping for it well in advance. Yeah. So although it is an extra reminder or an extra thing to remember, should I say, a good accountant should mean that you shouldn't be too worried about it.
Obviously, I know with administrative costs does come like formation costs and stuff. Like in terms of limited company, is there extra costs involved with having one over a sole trader or partnership?
Depending on who you use to set it up, usually there's a formation fee to actually incorporate the company. Different places vary. We've got our own fixed fees. So if there's anyone watching who wants to get in touch and find out more, just obviously get in touch with the office or email one of us. We'll be able to point you in the right direction. But on top of that, there's also the confirmation statement fee every year, which at the moment has jumped up massively in the last year or so to £34 a year. So that's an additional cost. But when it comes to sole traders, except for your fees, what you'd pay your accountant to complete your tax return and everything, there's nothing really else to it.
Well, I suppose, filter on from what you've said there, if you're a sole trader or you're starting to become a sole trader, you register as self-employed with HMRC. It's a form essentially completed online. If you're a limited company, yes, there's the extra costs like confirmation statement that you've said then. It has jumped up, and yes, £34 might not sound like a lot each year, but it used to be £13 for so many years. Then all of a sudden the government's just nearly tripled it. And where's the benefit to the businesses? I don't think there's any benefit really. So, it's that sort of thing. But with the limited companies, when you're creating a limited company, why there's probably a larger cost there to do it is because there's more things to think about. You've got to think of who's going to be the officers, the directors. Do you need a company secretary? What's the share structure? Who should be the shareholders? What's going to work in the future? What classes of shares should you have? And then also, your memorandum of articles, which really is just a governing document, how the limited company works, that sort of thing. You need to be thinking, is there any extra clauses and sort of stuff that should go in that? Like, it's a well-trodden path, that any accountant worth the salt's going to know and make it straightforward for you, but there is a reason why it just is more complicated, and that's why generally it's a cost. But if you're thinking about a limited company, the cost shouldn't be off-putting, because if there's a tax saving there, if it's giving you limited liability and it's the correct structure for you and your business, then that cost just shouldn't put anybody off.
Yeah, it's just one of them things. It's a cost, but it's not an off-putting.
There's a benefit to it. There's absolutely
because of the
benefit to it.
benefit
Usually, if
side.
you're going to be incorporating, the tax saving's going to be more than what the cost is, so it's definitely still more beneficial.
Yeah, it's just another thing to think about again, isn't it, really?
Yeah, absolutely.
Obviously, our last topic on this, really, I was going to look at is growth and funding in terms of like the ease of obtaining finance and investments when it comes to getting a finance or an investment for a sole trader as opposed to a limited company. Is there any differences?
What do you think?
There is some obvious differences. I feel like when it comes to gaining finance as a sole trader, obviously as a sole trader, you're going to be liable for it. So if you've got something personal which you could put security on, if you're comfortable doing that, you can. But when it comes to the limited company, getting that finance might be a bit more difficult depending on what's in that company, because if you don't have large assets and you're trying to get big finance, you're probably not going to be able to secure a loan on anything massive, if that makes sense.
I'd say every circumstance is different, irrespective of whether you're a sole trader or a limited company. So almost, if you've got a cracking good business and it's a sole trader, you're not going to be at any disadvantage trying to get finance than when if you're a limited company. In general, it might even be easier to get a limited company because it can give a bank more reassurance that those accounts are correct and they haven't been manipulated, let's say, because they've been filed with Companies House, where a sole trader hasn't got that same strictness in terms of providing that information. But I suppose if it was a limited company and it had no assets, there's things like personal guarantees and that sort of thing they would use. And there is some finance houses. So, for example, if there's 100 companies that provide finance, maybe only some of them would provide finance to a sole trader, where those would be like, no, we will only deal with businesses that are incorporated, that are a limited company or a limited liability partnership. We will only provide finance to them, and they'll have their reasons why they would do that. And chances are it's just because they're registered with Companies House and it gives them that security that the stuff that's been filed has had a bit more level of scrutiny than maybe a sole trader's information. But there's plenty of sources for finance out there if people are looking. We don't provide finance or anything like that, but there's opportunities if your idea is good or whatever. The reason you do is sensible, and we can certainly give you a good indication if we think it's the right thing to do, if you're going to be able to obtain it. And then there's businesses that we could suggest you get in touch with and see which one's right for you.
Yeah, so obviously, just again, a lot of things to think about, isn't there, really?
Yeah.
In terms of planning for future, if you were one looking to go to another, in terms of sole trader looking to go to limited or the other way around, is there any advice? Is there anything to look out for?
Yeah, I think there absolutely is. If you're looking to incorporate, it's not just about tax. There's other things to consider in amongst that. And timing can be everything. So incorporating at the wrong time can actually be really costly in terms of tax and money. It can cost you a lot of money if you incorporate at the wrong time. So I would always say if you think about incorporating, just make sure you get advice in and around it. There is relief for certain taxes. So there's incorporation relief for sole traders who are looking to move into a limited company, but things have got to be done correctly to make sure you qualify for the relief. And there's things to think about. For example, if you had a van as a sole trader, does that become owned by the company? If you've got a property or a trading premises owned by the sole trader or you personally, does that become owned by the limited company? So really you have to look at all that sort of picture to see if it's right or wrong. I suppose if you were a limited company looking to go into a sole trader, there isn't really the same sort of reliefs available. There used to be something many years ago called disincorporation leave. That's not there anymore. So you've just got to make sure that by disincorporating, you're not creating like a really bad tax bill by doing it. So it just needs thought again, and it definitely shouldn't be just something you think doing just on a whim. You need to get the correct advice on it. And a lot of people think it's easy. It's easy if you don't know the rules, because you might fall foul of something and it could cost you quite a lot of money.
Touching on, going back to the incorporation side of stuff, when you say tax as well, people just think, corporation tax, personal tax, but you also have to take into consideration VAT implications as well.
Yeah.
But now there's transfer of going concern, so as long as you're transferring all the trade over to the limited company, there shouldn't be any VAT implications on it.
Yeah. And then capital gains tax to think about as well. It's amazing, actually, stamp duty taxes. you're incorporating, and then all of a sudden you're thinking of 5 or 6 different taxes that could be impacted through that incorporation. And that's where, if you don't think about it all, you think you tick box on 3 of them, but then all of a sudden you've got a liability on 2 others. So you've just got to make sure that it's getting looked at, the full picture of it's getting looked at. And this doesn't have to be big businesses. It can be small businesses that can fall into horrible tax traps if they're not careful.
Yeah, it's all about thinking, isn't it? Thinking, timing, and speaking to the right people and getting the right advice.
And everyone's circumstance is different as well.
Yeah. So you need to know what you're doing.
Yeah, because what was, if you the good old, the advice down the pub, the advice they maybe got off their accountant to incorporate could be completely different to the advice that you would get even in the same industry, just based on circumstances and timing.
Yeah, and where everyone's at with stuff.
Yeah.
Is there anything else you would like to add on the situation and the subject of sole traders and limited companies?
No, I think if anyone is considering incorporating from sole trader or disincorporate, just get in touch with us.
Yeah. The only thing I probably would say as well is, let's say you're thinking about actually starting in business and you're deciding, should I be a sole trader or a limited company? Because a lot of people, they're starting business, they want to keep the costs low. They think, well, I'll just get going and then I'll speak to accountants 6 months down the line. That could actually cost you money just by not having spoken to an accountant to start with. Because, for example, if you're taking on a risky business, maybe you should be a limited company from day one. If you've been previously employed and you're moving into a sole trader business that there isn't a great deal of risk, maybe for tax purposes, that would indicate start as a sole trader, get some tax benefits with the view of incorporating later. So I would almost just say that do speak to somebody, even if there is a little cost of that, because it could save you a lot of money further down the line.
Yeah, so speak to someone at the start, not 6, 7 months later, just to get you on the right track.
Yeah.
Oh,
Absolutely.
it sounds good. So obviously today we've covered legal aspects, administration aspects, tax consideration and growth, and all the differences that come with being a sole trader or a limited company. If you would like any further information, please feel free to contact us at the office.